Are you looking to grow your dental practice and attract top-tier new patients? Discover the potential of digital marketing with a personalized strategy session. Join Lila Stone, the marketing director at Equa, for an exclusive 90-minute consultation. Lila and her team will dedicate 6 hours before your meeting to create a customized marketing plan specifically for your practice. This valuable opportunity is free of charge and comes with no commitments. Visit www.insuranceuntangledorg/MSM to schedule your meeting with Lila today. You'll also receive a free analysis report so you can start transforming your practice through the power of digital marketing.
You are now listening to another episode of the Insurance Untangled Podcast, where we explore the various challenges faced by dental practices due to their reliance on insurance. Join us in this podcast as we dive deep into the issues surrounding dental insurance dependence and offer practical solutions and strategies to help you take control of your practice's financial future.
Today, we are going to be shining a light on the parts of dental practices' finances that rarely get talked about, but carry some of the biggest risks. We're talking about AR assessments, credit balances, and Medicaid compliances. These aren't the everyday topics most owners think about, but they can make or break a practice transition, expose hidden liabilities, or trigger costly compliance issues that nobody saw coming. Welcome back to the Insurance Untangled Podcast, where we help dentists turn insurance struggles into growth opportunities by breaking free from PPO limits. I'm your host for this session, Don Adeesha, and it's great to have you here with us. Now, joining today is Devon Banks, who has helped practices across the country over numerous decades strengthen their billing systems, clean up their books, and protect themselves from financial blind spots. Now, this episode is brought to you by Equa Marketing, the digital growth partner behind this podcast and a trusted resource for dental practices looking to break free from PPOs. Let's unpack what's hiding inside your numbers and what smart practices do about it. Devon, welcome to the podcast.
Thank you for having me, Don. It's really great to be here.
Fantastic. Now, Devon, AR assessments don't always get the attention they deserve. Let's break it down from what is an AR assessment and why is it such a critical piece of a practice's financial health?
An AR assessment is many things to many people. It really just depends on what's going on in the practice. If you're talking about a comprehensive AR assessment, then we're looking at many, many factors there. We're going to be looking at days outstanding. We're going to be looking at the AR of both the patient and the insurance claims, both broken down by aging bucket. We're going to look at denial rate. We're going to look at the number of accounts as well as the dollar amounts on accounts. We're going to also take a look at credits. Credits do factor into an AR assessment. Again, various things to various people, but those are just your top key components of what an AR assessment entails.
Okay, so why is it such a critical piece to the practice's financial health? Why is it so important for us to really know these numbers in and out?
I think anytime you're looking at KPIs, it's going to give you a clearer picture of things versus going on your gut feeling. Oftentimes we get calls from clients or, potential clients because they say something just doesn't feel right. It feels like something's wrong. Or sometimes it's because it's really bad and they're unable to pay certain things in the practice, right? Their mortgage or rent is behind for the practice, the payroll, they're not going to be able to make that this week, unfortunately. That's when they're feeling the burn of the AR. However, typically those signs are always there way in advance if you're just looking at the right key performance indicators. So versus waiting for something to feel different, I've always been a fan of making data-driven decisions, right? Let's not wait for something to feel a certain way. Let's just constantly monitor your own numbers, and you should be able to see if there's any red flags that are waving in the air way before it really starts to hurt.
Okay, when we're looking at these KPIs, we should obviously have a bit of a benchmark to really know if we're doing well or if we're going off the track. Can you please share some of those benchmarks related to the buckets that you just mentioned?
Okay. So for me, for our practices, we don't like to see the collection percentage, which would be the adjusted amount collected versus the adjusted amount produced at lower than 98%. Now, that's a bit idealistic on our end, but we like idealistic. There's going to be factors that are going to maybe make that needle move up or down. We have offices that are at 101%. Maybe they're doing prepayments, but 98% is kind of our sweet spot. If you drop down to 95%, red flag, something's very, very wrong. Um, uh, Offices coming on board with us are typically going to be well below that, and it is our goal to get them back up to 98% within 90 days or so, depending on the size of the project. So definitely 98% collections rate is ideal, again, or more. Um, the other thing is, depending on the mix of insurance plans and the type of participation that's in place, on average, we like to see at least a 50% or more patient portion versus collection portion for the month. When we see patient portions are reduced, it typically means there may not be a good collection at the front office, right? Patients are coming and going and maybe they're not collecting properly at the front. They're heavily reliant on the insurance payments. Again, that can vary. Pedo, for instance, our pediatric dentists, they're going to have a higher insurance percentage versus patient portion. It just really depends on the practice. But I think once you find out what your sweet spot is and get your threshold for your practice, you need to monitor that number because anything that's a spike up or down could signify something significantly wrong. So those are two really good KPIs that I say to look at kind of ongoing as well.
That's great. And now, for practices going through a transition, why are AR assessments so important for both the buyer and the seller? And what happens when this step is skipped?
Let's approach this from both sides. That's a very good question. And it's actually been lately kind of coming up more and more, unfortunately. So let's talk about on the buyer side, right? Buyer comes in and has the due diligence period where they're reviewing the numbers in the books from the practice's prior years. Oftentimes they're looking at very chunky numbers. What's the total AR? Maybe they're looking at the aging, right? Not really much else. Sometimes they're looking at mix of payments, what types of payments they're getting. But man, the devil's in the details when you're buying a practice. It really is. You'll want to sometimes even look at what types of procedures they're coding out. You'll want to look at what their days of service is. If there is a large 90 days overdue, that's really important to know because there may be a reason behind that you really need to find out ahead of time. All of these behaviors from the prior owner are going to then translate into your patient base as well. So if there's a high number of no-shows and broken appointment fees, that's good to know, right? What's going on there? Why are these patients not trained to come in for their appointments? If there's issues going on with insurance, that just may signify something going on with the team member who's there, right? Which you might be inheriting as the seller. As the buyer. So it's always good to just know as much information as possible. Outside of looking at those big numbers, there's still lots of devils in the details. Credit balances are interesting because those typically also factor into the pricing of the practice. So if you're the seller, you'll want to find out, again, who do you need to get their refunds back to? And are there patients that you're going to have to give their refund back to your state to satisfy your legal obligations? That's something that's a process. Typically, people have credit balances lingering for many years. It's not a quick overnight thing, and it may be something that you're required to resolve as the seller in advance of the going to close, which means you need time, right? You need time and attention to that. So lots of ideas going around there about, what items to focus on pre-sale. Now, if I'm buying a practice, I want to really know, again, what am I buying, right? Am I buying these behaviors from patients? Am I buying what plans is this practice in network with? Am I going to be able to get grandfathered into some of those same premium types of plans? Fee schedules might not be the same, right? There may be some negotiated fees that the seller has done that you're not going to be privy to. So again, I think what I'm seeing right now is that The transitions model has not come along with the times. Years ago, we had very simple questions we needed answered about what's going on with the practice, either on the buy or sell side. But now complicated things have happened with insurance plans. Patients are different, right? The way the payer system is structured is very different. And there needs to be a lot more fleshing out of all the numbers, lots more questions asked before the sale goes to close. If you're a buyer, you also just really want to dig into those credits. Technically, if there's a credit balance on that account, that means the patient is able to come and get their money back from you. And that could impact your bottom line after you've purchased the practice, right? So those are just some of the things that I feel we need to pay a little bit more attention to during the transitions process.
From a seller POV, is it good to take a haircut on the price right now or try to fix the AR themselves right before the sale?
Absolutely try to fix it before, right?
Oh.
Typically, when you're getting paid for your AR, let's say the seller is, they're selling the AR along with it, which I recommend, by the way. I don't ever recommend a seller hold on to their AR and try to work it themselves after the sale. Man, I have some disaster stories about that. It's difficult once you're no longer the owner of the practice to do anything, right? You don't have as much control. Sure, there's contracts in place, but it just becomes a lot of back and forth. So, number one rule, if you're a seller out there, sell the AR, okay? But even better, try to collect it before the sale, right? Spend some time, and if necessary, spend some money and get your AR in as much as possible prior to the sale. When they go to value your assets and they're going to value that AR as a separate kind of line item, they're going to give you different percentages for different parts of the AR. So it might be, okay, 90% of the 30 and under AR, we're going to say that's 90% for that. And then maybe, I don't know, 80, I'm giving out some kind of discussing numbers, 80% for the 31 to 60, and then 70% for the 61 to 90. And maybe 90 and over, there's zero, right? Different structures for different deals. Why not just get 100% yourself for as much as possible, right? Ahead of time. Yeah, and especially if you kind of know what's going on with it, if you have like some interesting things that you've seen and you know what's happening with the AR and you just need to get someone on it, get 100% for as much as you can first, and then let them devalue the rest.
Check. Now, so much of practice growth comes from fixing the gaps that already exist inside the business. If you're listening and realizing there may be hidden opportunities inside your systems, operations, or patient flow, be sure to book a marketing strategy meeting with Echo Marketing through our website, insuranceuntangled.com/MSM. I'm going to repeat that one more time, insuranceuntangled.com/MSM. It's designed to help practices uncover growth opportunities and strengthen their performance. Now, back to our conversation. Now, Devon, credit balances are often one of the most overlooked risks in a dental practice. We touched on it, but why do they build up? And what do they actually represent? And how should practices be handling them?
It's an interesting phenomenon. I think the credit balances are just one of those out of sight, out of mind figures in a practice. I think they're just kind of hiding and no one sees them very often until they peak out. And then now everyone wants to say, like, is this a valid credit? I think that's number one. I think number two, who wants to give people their money back? Oh no, that means I have to like cut a check. I have to refund the patient. I mean, I think subconsciously providers are not racing to do that. They can't wait to do that. That's just not a thing. It's they begrudgingly give refunds, and I get it. I mean, we're all in business, right? Who wants to give a refund? However, it signifies that there may be a deeper issue within the practice. Typically, where I see high refunds or high credit balances, I also see high patient balances. To me, a credit balance can mean a couple of things. Number one, probably most common, you failed to get the proper copay from the patient. Sometimes that looks like a balance is owed to the practice. Sometimes it looks like a balance is owed back to the patient. Either of those things to me means you didn't get the correct copay, which signifies that there's kind of a gap in treatment planning technique. There's a gap in copay calculations within the practice. So either of those things is bad. Okay. On the credit balance side, it's just as bad, right? It's a little bit maybe not so bad because you have the power to just refund the patient versus chasing the patient down for your money. But it still signifies a deeper issue within the workflow of the practice, which I think is the thing we should be focusing on. Where's the disconnect here? How do we get this credit balance? And I'm not talking about, $5 credit but when we see these large dollar amounts, it signifies there's an issue.
Mhm.
The other thing I think it signifies, and maybe 50% of the time, there's been improper adjustments for sometimes a significant period of time, especially when there's dual coverage involved. So we have to consider a lot of the people we have in charge of posting payments at these offices, they're not honestly that skilled at it. Unfortunately for them, not their fault. Some of them have never been trained properly. Some of them are very new to the industry. Some of them are seasoned and have just not quite been taught the proper way to adjust claims especially again, when there's dual coverage involved. So what happens is potentially years and years of over adjusting claims. And it just
Mhm.
piles up those credit balances. And honestly, the doctors typically aren't looking at those numbers to really audit them, verify for accuracy or any of that. So it just goes on and on and on. Adjudicating dual coverage claims is very, very difficult for whoever's having to post that payment. It's it's a science almost, right? I mean, that's one of the things I think when we're training our team that we really have to put a lot of energy into training and a lot of oversight and auditing into verifying that they really have gotten it. And even then, every now and then our team will have to get together and really look at one claim together just as an
Mhm.
exercise because it's so complicated, right? Sometimes what happens is the insurance plan has increased their fee unbeknownst to you, and they're paying at a higher fee, but a lower fee is in the system. And that overage is not absorbed by a debit adjustment. There's lots of ways this could happen. The point is, we need to catch it early. And if it's not caught early, there needs to be an audit done. Because what needs to happen is if those are true credits, they need to be refunded to the patient. Most states have a 30-day policy. It needs
Mhm.
to be that if you are unable to locate your patient, then it needs to be sent to the unclaimed property fund for your state. And,
Okay.
that's something you can quickly Google, unclaimed property division. I live in Maryland. It'll pop right up.
Mhm.
And there's going to be a section for people looking for money that they think may be owed to them. And then there's going to be a section for people like dentists who need to put money back there when they can't locate who those credit balances belong to, or if they've moved, if their numbers are disconnected, that's where it would go.
Wow, that's really amazing. I mean, dual coverage seems like a whole nother beast on itself.
It is. We could do a whole show just on dual coverage.
Right. Now, you mentioned a little part over there, which I would love to get a bit of your advice on, which
Sure.
is getting people their money back. So, how would you advise practice owners to really change their mindset from like it being extra credit with them versus just returning it back to the rightful owner?
I mean, again, I know it's not fun, but it is what's required by law. So, I'm always going to err on the side of caution there. It's a legal compliance issue. And I have seen a couple practices burned by it when they, were very egregious and those numbers being very high. Um, I definitely recommend, I mean, the returning the money to me is the easy part, honestly, of this whole thing. The bigger issue is how do we get here and how do we prevent it from getting back here? Fixing those,
Mhm.
kind of processes within the practice that caused it in the first place. The refund part is a little easier to me.
What do you think about front desk teams saying it's only $20? Who cares? What's the
You
danger
know,
in that?
Whenever I'm talking to either my team or office teams about money, okay, patient money, I oftentimes tell them to pretend it's their elderly grandma's money. Well, $20 goes a long way for your elderly grandma potentially who's on a fixed income, right? So, and I think that oftentimes does happen. Again, my team, office teams, doctors themselves, we're so desensitized because we look at numbers so much, we're looking at dollars so much, it oftentimes doesn't feel real, right? It's just a number on it on the screen. But those numbers are tied to either to one of two people, typically the dental office owner, okay, which
Mm.
that's important to know. Like this is their real money. I tell my teams that this is the owner of the company's actual money that we're chasing. That's your mission. Or if it's the patient's, right? It belongs to someone. It's not just
Mm.
dollar figures on the screen. So we need to be the guardian of that money at the front office. Like you're the protector of this money, and then you need to get it to where it needs to go, right? Just like you would want your paycheck to come in. And so that's the approach I take when I'm training teams or when I'm training my own team. Just let's desensitize ourselves from the fact that like this is real money. Like if that were like a if you wrote off like $1,000 by accident, like how would you feel if someone did that to you, right? And you were missing $1,000. So I try to reframe it in that perspective, and it typically gets a little bit of needle movement from those front office teams. But I think again, sometimes it's you're just dealing with so many dollars day in and day out. It's just hard to kind of remember that important part of our whole exercise.
Yeah, getting resensitized to money being something real to a lot
Yeah,
of people.
yeah.
Um, Now, for Medicaid offices, CRUSH initiative, I'll redo that one. For Medicaid offices, CRUSH initiatives have raised the bar on compliance and accountability. What do practice owners need to understand about CRUSH, and how can they protect themselves from costly compliance issues?
So let's just start first by saying what crush is, because that's the fun little term that they've coined there. But let's just say what it actually means. So crush is the comprehensive regulations to uncover suspicious healthcare. And basically, I do believe all of this is strictly speculation on my part. Okay. I believe it came about as a result of the Doge initiatives, where they did uncover quite a bit of fraud, waste, and abuse in healthcare. I mean, I'm being honest here. I've been in healthcare 30 years. There's quite a bit of fraud, waste, and abuse in healthcare. I love my clients. I love the dental clients as a whole, dental industry as a whole. But we have a lot going on here. Let's just be real, okay? And it's just unfortunately, there are some bad actors. It's not the entire industry, overwhelmingly, but we do. It does exist within our industry, and some states have just not been great at holding their providers accountable. At number one, auditing their providers, and number two, holding them accountable when it's uncovered. So I believe the government saw some low hanging fruit here, especially within dental. We've been kind of flying under the radar for quite a few years. Hospital has quite a bit more eyes on them than we do, and even in just medicine, dentistry's been, for the most part, kind of untouched. Every now and then, you'll see a big case come into the news, but it's just very often that they're comprehensively auditing our providers. So those days are over. And we're stepping into a new day where they're going to be really taking a look at all of the Medicaid providers. And that's when the game changes. It's one thing to kind of be flagged for an audit if you have some irregular, coding practices that are popping on the algorithm of their system, or if there's been a complaint, right? As a lot of our audits are going to start because of a complaint from a patient, because maybe it's a team member who's complained. So those are typically why we're seeing audits in the dental practice. But now we're moving into a new day where it's going to be just audits across the board, and it's going to hit everyone's front door at some point. Well, that's a little bit different. So, in terms of how to prepare, honestly, for the audit, there's really not much you can do. I mean, you're not going to be able to identify what patients they're going to be looking at. The time frame has already come and gone. Patients have already been and went. They can go back. Typically, they're going to go back about 3 years. And so, yeah, who remembers, every single thing they've done for the past 3 years? The devil's going to be in the details there as far as your documentation and so forth. There really isn't much you can do now at this point, okay? Because the time frame is coming on. When they're auditing, they're auditing past claims, past behaviors, past documentation. what I think is important to do, I think for me, what kind of sparked my brain to think a little bit here is why don't we do a little bit better about auditing ourselves, right? We should be doing that anyway, but this is important and this is where dollars are going to be potentially involved if they find that there are some, egregious areas within the practice that you're not managing well. There are going to be financial penalties. And I think you would fare a little bit better if you could show and prove that you've already identified these areas and gaps and put together some type of a plan to get yourself back on the right track. So what can we do? Not much for the historical stuff, but I think that there's some wiggle room here in the future. And again, even if none of this were happening, if there were no CRUSH initiative, it could never hurt to just audit your own self and be better at the way we're doing things within the practice, just in case you get audited, right? Because you just never know. It's always a surprise. It's never something that they tell you months in advance.
Right. Now, do you believe it's possible to be a high volume Medicaid office and be 100% compliant?
I don't think it's possible for a low volume, any type of practice to be 100% compliant. Absolutely not. That's just not possible. There's too many people involved. Even if it's a 3-man show at the office, that's 3 different people that could potentially drop the ball somewhere or the other. I think perfection in business is just never a thing. I think it's just not. I mean, it's what you're trying to achieve, but in this fast-paced environment we live in, I just don't know if it's possible. I think we're going to shoot for that goal, but 100%, I don't know. I have some really, really great offices and they're solid and they're just doing all the things they're supposed to do, but everyone has an off day. So 100%, I just don't know if it's achievable. I think you want to just keep your red flags low. You want to, close your gaps as much as possible, but 100% is just going to be difficult. Yeah.
So that's very interesting. So then if Medicaid CRUSH auditors knock on your door and you have been trying to be 100%, but you're at that 90% mark or whatever,
Sure.
and you're probably aware of the areas that are making that gap, how would you handle that conversation? Is there any tips for us?
Honestly, I think at this point, all offices who are accepting Medicaid and Medicare should be having a really long sit-down meeting and put an action plan together. Again, even if this initiative were not, launched or not in place, it's just still a good idea because there's still the ability to be audited, even if this were not kind of looming over our heads. There needs to be a lot more attention paid to this area. Again, this is the area that can cause financial harm to the practice, right? Because they're gonna start to take away monies if they find that there's areas for those claims that you maybe did something wrong. They can say, "Oh, well, we don't think you should be paid for that," and they're gonna take it back. At times, how many claims, and it piles up and it adds up. So this to me is just a really important area. I think again, we've just gotten comfortable as an industry for a long time. We've been just kind of sailing along and now those chickens are coming home to roost. Unfortunately, we've not been in the habit of having to be better about a lot of these areas. I don't honestly think the average practice knows what they're looking for in an audit. Like even something as simple as identifying that to know what areas are we weak in. What are they looking for and what areas are we weak in? I think just identifying those things is a great first step. And trying to get an action plan together to get yourself back on track. Most of what I'm talking about does not financially cost the money anything to implement. These are not like something you have to significantly pay for. I mean, it's just changing behavior of the doctor and then let that trickle down to the practice as well.
Check. Changing behavior. Now, I would love for you to give us a golden take, perhaps the key takeaway from our conversation here. What would it be, Devon?
Let's just see here. That's a sneaky question. I would say for this particular conversation, always be auditing, I think is the thing I would say. And when I say auditing, not in the sense of like a government, agency auditing you. I mean, you as the practice owner out there, or even a manager who's out there, always be auditing your teams. Look for not like 100% of everything they do. We don't need you to like oversee every single item that they touch, but take some little snapshots of the work that your team members are doing. Look at a couple of credit balances once a week. Look at a couple of patient balances once a week. See where they're coming from. Look through your Medicaid patients, from start to finish life cycle. See, did you hit all of those areas of concern? Just do more often auditing of the team and make sure we're not really dropping the ball. Some of this, by the time it gets to someone like me, or unfortunately it gets to be an audit, it's a longstanding problem that could have easily been resolved if they were just aware. So awareness, you're going to have to create yourself. You're going to have to go looking. You're going to have to be a little bit more diligent. Again, managers and dentists out there, of just overseeing the work your staff is doing, making sure you're auditing them and sometimes auditing yourself.
Great. Devon, where can our listeners get in touch with you and your work?
Okay, so I am at Devon at DTECH, DTECH for billing and claims.com. All my socials are at DTECHBC. You can reach me at 1-800-679-1140. I'm pretty easy to find, though. Those are all my main areas to locate me.
Amazing. Thank you very much for this wonderful conversation, Devon.
Thanks for having me again. It's been great seeing you as always.
Now, if today's conversation resonated with you, visit www.insuranceuntangledcom/resources to download the episode guide for this session. And if you're ready to build a stronger, more profitable practice, book a marketing strategy meeting session to audit your digital presence with Echo Marketing using insuranceuntangledcom/MSM. I'll repeat that one more time. insuranceuntangledcom/MSM. Don't just listen to the episode, take action. That's where the real value begins. Until next time, Don Adeesha signing off. Take care.